Good afternoon, everyone. I'm Mark Weetman from Vunani Private Clients. Thank you for joining me on this Monday evening. Thank you very much for the JSE for inviting me. I'm going to be presenting this afternoon on how to invest in metals, particularly precious metals. And what I'm going to concentrate on is quite a few instruments that are listed on the JSE. I'm going to show you a couple of different ways that you can get involved in adding commodities into your portfolio. So the first question should be, hang on, before I start, there might be some of you who want to raise some questions for me. If you wouldn't mind typing them in, I'll get to them at the end of the presentation. But I will remind you about that again during my speech or my presentation. So why do you want to add commodities to your portfolio? Well, clearly the obvious one is that metals or precious metals make money. So this is a gold chart, and this is going back a fair number of years. But you can see from the this early 70s up to now, you've had almost 8,500% returns in gold. So clearly, if there's one chart that sells my story, it should be this one. But there are other reasons. And, gold is often, and so why does everyone love precious metals? Well, everyone, when they talk about precious metal, talks about gold. And typically, it's always been seen as a safe haven. It's there to protect you against inflation. And it's also there for insurance. So when you've got geopolitical, financial, military problems, people tend to flight into gold. And this is because it's portable. You can put coins in your pocket and you go across borders, or you can put gold coins under your pillow. So there is that sort of insurance aspect to precious metals. The other thing that we like precious metals for as portfolio managers is because they tend to have a negative or a low correlation with equity markets. What that really means is that when equity markets are going up, sometimes commodity markets are going the other way. But what interests us is if markets are going down, equity markets are falling, you tend to get precious metals going up. And that's going to assist to diversify your portfolio. But we'll chat about that a little bit later. Silver is also another metal that we trade, and that goes into a lot of industrial uses. So electronic appliances, batteries, medical products. If you think about the amalgam in your tooth, that's probably got some silver in it. And platinum, as you all know, goes into things like catalysts, jewelry, and refining. So the ones that we tend to trade and concentrate on our trading desk is gold, platinum, palladium, silver, and copper. Those are typically the commodities that we track and that we trade, and we add to portfolios. And if there was one last reason to why you should add precious metals, it's because they're shiny, according to Gary Boyson of Vunani Private Clients. So if you look at our portfolios, where do commodities fit in? So we have this alternative investments bucket in our portfolios, and you can see it's called alternative. It's kind of a small sliver of what we would put into our diversified portfolio. But what we'd suggest to a client is that you should always have between 5 and 8%, maybe a little bit more if you like a little bit more risk, you want a bit more diversification, but you should have about 5 to 8% allocated to commodities and alternative investments in your portfolio. And what you should do is spread that across a variety of commodities. But we'll touch on that in a moment. So the JSE's website, this is a screenshot from the exchange's website, and I thought, seeing the brief was to tell you how to invest in precious metals, I would guide you to sort of 5 of the different instruments that you can trade on the JSE that all have a commodities underlying. Clearly the first one is equities, and those would be shares. And those would be shares in platinum producers, iron ore producers, gold producers. The next one is Krugerrands. You can trade Krugerrands on the exchange. They are tradable, both the full coin and the 1/10th contract. The third one I want to touch on is exchange traded products. Fourthly is equity derivatives, and there's a couple of those. And fifthly, metal derivatives, which are traded on our commodity exchange. So if you go onto the JSE website and you click on products and services, you'll see this list that I've put up before you, and you can then click around and you can sort of get a bit more information on what I'm going to very, very briefly cover this evening. So let's start off by looking at equities. So this is the Resource 10. So these are the top 10 shares available on the JSE. And you can see the ones I've highlighted in sort of a platinum color and the ones in a gold color. So the two main platinum stocks that you can trade are Anglo-American and Impala Platinum. You know, they typically make up about, what's that, about 4.5% of the weighting of the J210 or the Resource 10. Not a huge component. Then you've got Ashanti Gold and Goldfields. You can see Harmonies doesn't make it into the top 10 resource stocks anymore. And once again, a fairly small representation. What's that, about almost 7% of the index. So you can see the platinum and gold is actually not very much a very big player anymore in our Resource 10. So when you're listening to the analyst or the talking head on TV talking about resource stocks went up, he's actually talking more about iron ore, steel, and oil. He's not particularly talking about platinum and gold anymore. But clearly, if you want to add platinum and gold stocks into your equities portfolio, you probably want to start by looking at these four. So the major miners that you might want to have a look at, as we said, Goldfields, Harmony, Anglo Golds. And then the other way of playing this, so that's in the underlying share. The other way of playing this trade is to look at the ECFDs or single stock futures on these. And you could typically get 7, 8 times gearing on these underlying gold stocks if you wanted to play the derivative. But I think the derivative is probably out of the scope of this presentation, so I haven't really gone into too much depth on it. But you're more than welcome to mail me at mark@vunaniprivateclients.co.za, and I can take you a little bit more about trading the JSE CFD or the single stock future on gold stocks. Clearly, the minor gold stocks that you might want to play as well are DRD Gold, Village, and Sibanye. Sibanye not so minor anymore. Clearly, it's had a reasonably good run. Once again, you're looking at fairly low gearings on these, 5 to 7 times gearing, but you might be asked for a little bit of suffix margin, more margin on these. So that's another way of playing metals on our markets, and that's indirectly by via your gold shares, either the majors or the miners. Why is this not our preferred play in terms of adding commodities? Well, quite frankly, if you can tell me about labor, power, tax, infrastructure, all of these sort of things, licensing, financing on massive debt, then you could probably price what it takes to get an ounce of gold out of the ground at these miners. And of course, the deeper they have to dig, the more it costs them. And as you get more labor cost, the more to get an ounce of gold out of the ground. So clearly, if you can understand the fundamentals of that business, you should be able to price this gold. I find that very, very difficult to understand how to price gold. So I've asked Gary Boyson to come up with a price. And he's saying, it probably takes you $1,600, $1,650 to get an ounce of gold out of the ground if you're a miner. But the problem is the gold price is trading at $1,200. So that doesn't sound particularly attractive to me. So in our equity portfolios, we have very, very little gold and platinum exposure. At the moment, we tend to go rather for the diversified miners like Billiton's, Glencore, these sort of diversified miners in our portfolios. So moving on. Okay, so I often get asked this question in presentations and when clients come to visit us at the office. Should I buy gold or the gold, platinum, palladium, copper, or should I buy the miners? And quite clearly you can see, and that's a graph which takes all the junior miners worldwide and puts it into an index, and it compares to the gold spot price. And you can see that this massive spread has opened up. So effectively, if you'd been owning the miners, you would have done much worse than owning gold in the spot market. That differential is probably going to close sometime, but at the moment, our preferred play would still be to go into the commodity and not the miners themselves. So now that we've said shares are probably not my preferred place to be, what else is available to you as the retail client? Well, there's quite a lot of exchange-traded funds that have their underlying in gold, platinum, palladium. And here's a list of them. And some of them you'll recognize. New Gold has been around, GLD, for quite a long time, offered by ABSA. And there you get a play on the gold price directly. You've had some recent entrants into this market. So Standard Bank came a year or two ago with their gold ETFs. So here what you're doing is you're getting an exchange-traded product which directly tracks the underlying price of the commodity, but in rands. And that's very, very important, because what you're doing here is you're adding a rand commodity basket into your portfolio. So you're very much dependent on the movement of the gold price, for example, and the rand-dollar exchange rate. And as we know, sometimes those can go in opposite directions. They tend to be inversely related. So what you're gaining on the gold price, you sometimes give back in the rand-dollar exchange rate. So we'll come to some dollar-denominated investments later on, but this is a good place to start for diversification in your portfolio. So let's use one example. So we often are asked about New Gold. It's been in the market the longest. It has got the largest assets under management of our commodity ETFs. So let's go take you through a very simple example on how to price New Gold to make sure it's trading close to fair value. So this is a slide we did a couple of months ago. The gold price has come back from this level, but it was trading $1,314 per ounce. The currency at the time was at a strong 1068, and I can't believe I'm saying 1068 is strong, but relative to where it is at the moment. So that gave you a rand gold price of just over 14,000, and GLD was trading at 135. So clearly that's not one-to-one. Well, what happens is you have to take the dollar gold price, times it by the rand-dollar exchange rate, and times it by how much is backed. So there's about 96.4% hedge, and that will give you the fair value, which is 135.30, which is very, very close to where it was trading at the time. So that's a really simple calculation to work out fair value of GLD, and you can take that one away and use it. Clearly, we update that every now and then as the amount of gold that's backing that ETF changes. The one good thing about an ETF is it is a collective investment scheme, so it has to comply with the CISCA, the Collective Investment Schemes Act, and it is an exchange-traded product, so it's also policed by the JSE. And what you have is ABSA also making a market, so there is very little chance of you getting into trouble with this instrument. Then we can look at exchange-traded notes. Now, exchange-traded notes have become very, very popular recently. And you can see I've listed quite a lot of commodity-backed exchange-traded notes. These are not funds. So these do not have to comply with CISCA, the Collective Investment Scheme Act. So they can actually create a debenture structure, and this might not actually be backed by the physical commodity like the ETF is. This could be backed with a derivative product. So here you are taking on a little bit more risk against your counterparty, but if you look at who your counterparty is, Rand Merchant Bank, Investec, ABSA, and Standard Bank, I think you're pretty comfortable that the person writing you the instrument is going to perform and is going to deliver on this. So you can see there's gold, platinum, silver, copper, and palladium. So all of the commodities are available via exchange-traded notes. So if you wanted to add precious metals to your portfolio, to your equity portfolio, this is probably where I'd want to look. The other thing about exchange-traded notes is that their TERs, which is their total expense ratio, that's how much you as the investor are going to pay for the structure, the asset manager, all the costs of having that investment, is a little bit lower than the exchange-traded fund. So you probably want to have a look at these because they might be a little bit cheaper to put in your portfolio, and they definitely track the underlying commodity. What I've done is I've included all the market makers or issuers there, and I've given you their URLs. And remember, this presentation is available for download, or you can view it online, and you can then go and have a look at all the fund fact sheets for each of these products, and you can drill down into each product on its own. So moving on from exchange-traded notes, the next thing that you can trade on the exchange is the derivatives on both those ETFs and ETNs. And we do this every day for clients. And this is where clients want to play, instead of putting the commodity into their basket or their equities basket for diversification, here they want to punt. Here they want to actually make a short-term profit on short-term movements in the underlying commodity. So here we have quite a few exchange-traded CFDs and single stock futures. You can see one that's quite popular that we trade quite a lot of is the ECFD or the JSE CFD or the single stock future in New Gold. And there you can make profits based on very, very short-term movements in the underlying. But I'll get to that. I've got a little example of that a little bit later on, so I don't want to dwell too much on that. But you can see there's quite a few derivatives you can play as a retail client. And then the other one, which is fairly new, is what they call the JSE Quantos. These have been around about a year, 2 years. So I've got an example here that we put together for a presentation. Gary put it together for some of our retail clients. But essentially, a quanto is a rand-denominated instrument, but you get the performance in dollar terms. So you're not actually riding the rand-dollar exchange rate. You're getting the equivalent of the dollar movement in the underlying commodity. And there's quantos on silver, gold, if I remember right, copper and palladium and platinum. So if you need any more help on these quantos, you must give our office a shout, because they're quite complex and we need to take you through them with a little bit more than the 15 minutes that I've got today to kind of take you through this. But just to give an example, if you at the moment wanted to trade the gold quanto, you would put down 5,700 rands with the margin with your SAFEX member, and you would be trading a gold exposure of 1,311, so about 21 times geared. So when something's 21 times geared, you really are looking for short-term movements. You know, a 5% move in the market's going to give you a 100% move in your margin. So you've got to be careful here. You're playing with a bit of risk. So I just want to, having taken you through the instruments, and before I go into this example, I'm just going to recap, because I have gone through it very, very quickly because of my time constraints. But let's take you back to that slide which says what's available to you as a client. Okay, so just to recap, you can go onto the JSE website to find these, or you can go onto our own website. That's vunaniprivateclients.co.za. We would have also some information on our website about these instruments. But you can start off by trading the underlying shares, that's the equities, on the gold miners, platinum miners. You can trade Kruger rands on the exchange, very tradable. Interestingly enough, there you have to take physical delivery, or you can get your stockbroker to hold them in custody for you. Exchange traded products, those are exchange traded funds and exchange traded notes. And I think I've taken you through a couple of what's there. There is there's about 68 exchange traded products now available on the market. Once again, click and read the JSE website, quite a lot of detail on that. Equity derivatives, I very, very quickly talked about JSE CFDs and single stock futures, both on exchange traded products and on those underlying shares. And then metal derivatives, for example, the quantos. And I think if you want more, I think we could do another evening on equity derivatives and metal derivatives if we wanted to do a bit more on that. So let's scroll through to where I think, well, not where I think, where my team think we are in terms of the commodity cycle at the moment. And I'm afraid it's not particularly good news. So new gold. Once again, GLD is one of the most popular ETFs to be traded on our exchange. You can see that my trader, Robbie Pietropolo, otherwise known as Robbie P by our clients, he's had a look at this and said, oh, there's potentially a small head and shoulders forming here. It's not convincing, but there's that trend line, that inclined trend line, and he's worried that if we break through that, then we're potentially targeting 111, 114, which is, you know, that's a fall of sort of 16 rand on this. So that's an 8% down potentially from here. So what he's saying is, watch this level. You know, I think we're at a key level in terms of gold in dollar terms, you know, around this 1200 level. We kind of got to find some support here. Otherwise, gold might be in for a little correction. I do think if you see this pullback to around that 110, 115 level, we certainly would start becoming buyers of GLD down there. We might even, because we're short-term traders, look to get short at 130 on this break of this inclined trend line and look to buy back our short at 115. But that's a story for another night. Next one up, platinum. Well, once platinum went through that 200-day moving average, you know, it was sort of game over for a while. And you've seen platinum pull all the way down, and it's getting back to that previous low, which was in sort of September of last year, I think it is. You know, that's a long way down, sort of 136, 137, which was the previous bottom on platinum. So from our side, we're probably not going to accumulate on this new gold platinum yet. We're probably going to wait, even though you've had rand weakness, which should have helped the commodities in rand terms. This has been a one-way bet for a while. So we would look to probably start accumulating below 140, closer to 137, 138. We're going to be buyers of this. We break that. Oh, I need to go back to a longer chart to see where we go to from there. And if you look at the stochastic and the relative strength, you know, we're way below 20 on the relative strength, but we haven't had a turn on the stochastic yet. So we're probably, from a trading point of view and accumulation point of view, going to wait on this one until we get to 137. And there's a slide, unfortunately, that I try to sneak in. I was waiting for our analysts. We have a relationship with a crowd called Gold Silver Club, and they put out recommendations for us every week. They have a newsletter that you can subscribe to through us. And we also have a webinar that you can join at 2 o'clock on a Thursday, where they take you specifically through trading commodities, and they take you through the setups. And you're welcome to come and join that. Send me an email if you'd like to join that presentation. But they had a look at gold in dollar terms, and they were saying that this 1200 level is key, and that we should hopefully get back above 1200, and that maybe we could have a run to 122, 1220, 1222. But then they believe that we're going to have a turn down for another sort of $50, $80 from there. So that's not good news for the gold bulls. And unfortunately, everybody's a gold bull, and we're not one of them at the moment. We're also not a gold stocks bull either. In fact, Robbie P's philosophy the whole of last year was come in on a Monday and short gold shares and buy them back on a Friday. And that's worked quite well for us. So thank you very much for listening to me. Hopefully I've given you a little bit of how to invest in precious metals. There's a lot of different ways that you can get involved in precious metals on our exchange. If you want to see some of these stock tips that we put out, the easiest way is to go on to @Vunani on Twitter. We do put out our trade tips, secrets, breaking news. We've got small cap research there. We've got commodities research. We've got FX research that we put out there. More than welcome to go and follow us on Twitter. And there you can follow some of our trading ideas, or go onto our website, go onto our Facebook profile, or send our guys a mail at trading desk at Vunani Private Clients, or you can phone them. That phone number on the slide is wrong, I see. It's 384-2920. As I said, 011-384-2920. Phone our guys, ask them some questions. That's what they're there for. So guys, it's that is my short 15-20 minute intro into trading in precious metals. Hopefully it's given you some taste for what you can trade on the exchange. I am at your disposal. Feel free to fire off any questions. I'll fire them at me. Let's see what you can come up with. Thank you very much.